So I hope so you all are fine. And today, this is your teacher Harish Bhatt. And today we are going to go for a question of A-2-Accounting regarding investment appraisal, which may be also known as capital budgeting. So first of all, let's decide about capital budgeting. It's just like budgeting, but budget is a financial plan for the future time period, which is normally of 1 year. But capital budgeting is for heavy investments, which is going to last for more than 1 year. So it means that we need to go for the evaluation of that project in a different manner, because the investment which we are going to make today will give us the result, full result, or you may say after 4 years or 5 years. So that is known as capital budgeting. Like if you are introducing a new project, if you want to invest in a new machine, which will give you product in the next 4 years or 5 years, and then you want to evaluate that project. We have different kind of investment appraisal methods, which we used to use in our A-level accounting, which is known as NPV method, payback period method, and accounting rate of return, and internal rate of return, also known as IRR. Accounting rate of return is also known as ARR, average rate of return. We used to call it as average rate of return also. This question has basically come in February-March 22-32. February-March 22-32 is the question in which this question has appeared in our exam in A-levels P4 or paper 4. At that time, there was only paper 3 though, but it has come now, it will come now in paper 4. So ABC costing, I've already given you the questions. Budgeting, I have given you the questions regarding cash budget also, and investment appraisal, because you have asked me to solve the question in which you have to find cash flows where NPV is 0. So if we assume that NPV is 0, then what is the amount of cash flows we need that NPV will automatically becomes 0? So we have to go reverse in order to calculate that. So we will go for all the 4 appraisal methods, and then we will go for that particular task which I have already assigned. So February-March 22-32 is the question. This is the important one for your May-June 2024 paper, which is going to be held tomorrow. So the directors of J Limited plan to buy a machine costing 5,50,000. The machine has a useful life of 4 years with no residual value. As discussed earlier, residual value, scrap value is no more a part of your syllabus. So it won't come in your exam. Yes, it was a part of your syllabus till 2023 start. But now it is over. You won't find a question of residual value or scrap value. So let's see how to go on this. It is expected that the machine will generate a net cash inflow of 2 lakh for each of the first 2 years. It means that if you invest... So if it is expected that the machine will generate a net cash inflow of 2 lakh for each of the first 2 years, followed by a decrease of 10% in year 3, and the further decrease of 10% in year 4. The cost of capital will be 10%. You have been given 2 kinds of discount rates, 10% and 16%. So whenever you will be given 2 kinds of discount rates, it means that somehow or the other, the examiner will ask you to calculate IRR, internal rate of return. Because in order to find internal rate of return, we should have 2 discount rates, which is 10% over here, or we need to have 2 cost of capital percentages like 10% and 16%. And IRR is going to be between these 2 percentages. So let's first start solving the question for a particular part of it. So 5,50,000 is the initial investment. So if we talk about net cash inflow, if we invest in the machine, the cash inflow for the first year is 2 lakh. The cash inflow for the second year is again 2 lakh. The cash inflow for the third year will decrease by 10%. So it will be 1,80,000, because 10% of 2 lakh is 20,000. You subtract it, 1,80,000. And then in year 4, it will decrease again by 10%. which is 162,000 is going to be the net cash flow for year 4. First of all, let's see what is meant by the cost of capital. Cost of capital is the cost of equity or cost of debt you are putting in the project. Definitely, if you want to invest in the project, there are two types. Either you will invest your own capital, then you have to incur opportunity cost, because you can invest in some other way also. But now you are putting your capital in the project. So it means that you have to incur opportunity cost, which is going to be a loss. And that is a cost of capital. That is known as cost of equity. Then cost of debt. These two things combined together becomes the cost of capital. What is cost of debt? If I have taken a bank loan to invest in the project, I have to pay interest on that bank loan and I have to repay that loan also. So that interest is basically the cost of capital, because by investing in the project, by investing in the machine, I have to pay interest after every year. So cost of debt, it is also the required rate of, it is also known as required rate of return or discount rate. We used to say that. Calculate the proposed investment payback period, accounting rate of return to 2 decimal places, net present value and IRR. So let's start the question. Here I will write years. And here I am going to write the cash flows. Sorry, spelling mistakes. And here we'll start with from 0, then 1, 2, 3, and 4. Right? Let's see. First year, you will be having only outflow. How much is the outflow? 5,50,000. Why, sir? Year 0 means that is the start of the first year. So in accounting, we consider that start of the first year will be the end of the last year. So last year end means 31st December, and 31st December of the last year means 1st January of this year. 1st January of this year will be taken as year 0 in the chapter of investment appraisal. So year 0, we have invested 5,50,000. This is an outflow of cash. So it has to come in negative. Now in year 1, we are getting cash inflows because we have invested in the project in that particular machine. And that machine is giving us a return after all payments. The net return is 2 lakh. Then in the second year, it is 2 lakh. Then it will decrease by 10%, 1,80,000. And then again, it will decrease by 10%. That is going to be 1,62,000. So let me write it first. So in year 1, 2 lakh, again 2 lakh, again 1,80,000, and then again 162,000. How come, sir? Beta, if you calculate 10% of 1,80,000, it becomes 18,000. And you subtract 18,000 from 1,80,000, you will get 162,000. So it's quite easy to understand that. Next is in order to find payback period, I'm going to calculate the cumulative cash flows. Cumulative cash flows, the word has derived from accumulation. Accumulation means you are combining the cash flows together. So you will calculate cumulative cash flows. So the first in year 0, the cumulative cash flow will remain the same. That is 5,50,000. That it is going to be a negative outflow of cash, which we are going to discuss for today. Okay. Shiza, can you turn off your mic, please? If you want to say, you can say on the message board, because mic is creating problem. No, my voice is quite clear. Maybe at some time.
No.
You have a problem in your internet. My voice is clear. It is from your side, actually. That's why you are finding it that way. I have no other choice to remove you because you are not making your mic off. So I'm sorry. I have to remove you. Okay. That's very good, Tayyab. Let's calculate it. 5,50,000 is the negative. 2 lakh is going to be a receiving 2 lakh. So the remaining amount is going to be, again, it will be negative because first year you are getting 2 lakh. So out of 1 lakh, 5,50,000, 2 lakh has been received. The remaining amount is going to be 3,50,000. Then again, 2 lakh has been received. The remaining amount is going to be negative 1,50,000 because you are combining the cash flows. And then if when the amount of cash flows is more than the cumulative cash flows, you will stop the question. So it means that the payback period is going to be 2 years plus 2 years and plus 1,50,000 divided by 1,80,000 multiplied by 12. Generally, we used to give answer in not in days. You have given answer in days, doesn't matter at all. But generally, we used to give answer in months. So it's better that we used to give answer in months. Sir, how come you have stopped calculating it? Because now the remaining negative cash flow is 1,50,000, which we needs to cover. And we are getting 1,80,000 in the third year. So if we are getting 1,80,000, it means that 150,000 will be covered in the third year, some way during the year. So then we have to calculate. So the answer is going to be 2 years and how many months are there? 150,000 divided by 180,000 into 12. Please, if you can write it and tell me. In months, I'm telling about. So I want you to go for months rather than in years. Please answer.
10 महीने sir.
Okay, nice. 10 months. That's great. Now we have to calculate average rate of return, which may be known as ARR. So ARR, the formula to calculate ARR is average profit over average investment, average profit over average investment multiplied by 100. Now, what is average profit? But here, again, you have to be very clear about this, that you don't need to use disposal value in average investment because it's not a part of the course now. But in business, you will calculate average investment by adding disposal value. So you remember this, okay, from this year or from previous year, the disposal value will not be calculated in average investment, which is, the answer is going to be original investment divided by 2. The answer is going to be original investment divided by 2. So average profit, when we are going to calculate, let's calculate it. What you will do, total cash flows minus total depreciation divided by 4, because we have 4 years, because the project in which we are going to invest is for 4 years. So we will get average profit. And how we are going to go for this? Total cash flows 2 lakh. Total cash flows mean जो पैसे आपको मिल रहे हैं. Total profit मतलब इसका. Total profit without depreciation. Okay, total profit मुझे लिखना चाहिए था. I should have written 2 lakh plus 2 lakh plus 1,80,000 plus 162,000. So what is the amount? 2 lakh and 2 lakh is 4 lakh. 4 lakh and 1,80,000 and 5,80,000. Then it will be 6,80,000 and 62,000. How much it will become? 7,42,000, if I'm not wrong. Minus total depreciation is 5,50,000 divided by 4. You will get your average profit. Sir, how come the depreciation is going to be 5,50,000? In investment appraisal, you will always calculate depreciation through straight line method, means through useful life. So 5,50,000, 4 years is the life, 5,50,000 divided by 4 will be your annual depreciation, and total depreciation is going to be divided by 4 multiplied by 4 आप करेंगे, you will get the annual depreciation, which will become 5,50,000. So 7,42,000 minus 5,50,000, 96,000 is going to be your average profit. Now I can calculate over here. 96,000 divided by average investment is 5,50,000. Original investment divided by 2. That is 2,75,000. 5,50,000 divided by 2. That is 2,75,000. So we will get our ARR or average rate of return. How much it will come, please?
$34.9%.
34.9%. You may write 35% also by, you can do that also. So 35% is a good ARR as per this question. So we can easily understand that. Now let's go for the net present value. Net present value means that it is the net present value of the future cash flows. Okay. And you have to multiply it with the discount rate to find the present value, total present value of the future cash flows minus present value of outflows. This is the net present value. Why, sir? Because of the time value of money. Whatever amount you are going to receive after 1 year is not the same as you are getting this year, right? Yes, Tayyab, any point you want to raise? Okay. हाँ, गलती हो सकती है, बिल्कुल मुझे बताओ ना. मेरे ख्याल है टोटल जो हमने कैलकुलेट किया उसमें मे बी थोड़ा फॉल्ट है. लेट मी चेक इट अगेन. 4,05,80,000 plus 162,000. I was not 742 is fine. Minus 5,50,000, 192,000. 48,000. Yes. Yes. This amount is wrong. This is going to be Baki. All of you are sleeping. Only one child is there. Okay. So this calculation, Ali, मैंने आपसे कहा था कि you have to go for the calculation for me because I don't have the calculator with me. So 48,000 divided by 2,75,000 into 100. What is going to be the answer now?
17.45.
17.45%. 17.5% you may say. Okay. No, I can be wrong also. Doesn't matter at all. And I learn from my students also. So I have no such kind of attitude. But it's very important to have a clear message to your students. That's very important. अच्छा वो बताता हूँ मैं आपको. Total depreciation means 1 year depreciation is going to be 5,50,000 is the cost price divided by 4 is going to be 1 depreciation for 1 year. Now when you multiply it with 4 to calculate the 4-year depreciation, you can find the 4-year depreciation easily. Right? So now let's calculate the net present value. What is the discount rate? That is 10%. So 0.909, 0.826, 0.751, and 0.683. Let me write it over here. Discount rate. The first discount rate is going to be 1, then 0.909, then 0.826, 0.751. Generally in paper, we used to have 10% discount rate, but it may change also. Doesn't mean that it will remain the same all the time. Or examiner will give you the same discount rate, 0.683. So now you will multiply let me complete the question, then we'll discuss, don't worry. Now I'm going to rub it up because of the reason that I'm finding NPV. So you should not be confused with cumulative cash flows because that is used for a payback period only. So that's why I am just deleting that so that it may not create any confusion in your mind. So cash flows we have calculated. Now we have to find the present values. So present values, you have to multiply. So the first amount is going to be 5,50,000. That is negative again. Why? Because 5,50,000 into 1, you will get the present value negative for the year 0, 5,50,000, because that is the outflow of cash in the year 1. That's why the present value of year 1 is the same because there is no discount factor at that time. Yes. So Ali, can you please do for the second one, 2 lakh multiplied by 0.909. What is the amount?
180, 1,800.
Okay, 180, 180, 1,800. Thank you. Then next is going to be the 2 lakh multiplied by 0.826. Yes, please. 2 lakh into 0.826.
165, 200.
Thank you. Next is going to be 180.
165, 200.
Yes, I got it. Then 180,000 into 0.751.
135, 180.
135.
180.
Thank you. 135, 180. And then 162,000 into 0.683. 162,000 into 0.683.
110, 646.
646. Now what I will do, I will add up the all positive values and I will subtract 5,50,000 and that will be my NPV or net present value. If NPV is greater than 0, we will accept the project. And if NPV is in negative or less than 0, we will reject the project. Because NPV gives you the positive outflow we are getting by investing in the project in absolute terms. Absolute terms means that much amount you are getting by investing in the project after 4 years in true terms. So you will add up all these 4 values: 181,800, 165,200, 135,180, 110,646 minus 550,000. So how much you get?
$42,826.
42826. So our NPV is positive. We are getting, how long it will take to return your initial investment, that is 2 years and 10 months. It is still during the project that we are able to recover our initial investment. ARR is also acceptable, 17.5%. It is acceptable. There is no cutoff criteria though. And NPV is positive, so we will accept the project. Let's discuss now about IRR. IRR means internal rate of return. And in order to calculate IRR, we should have 2 discount rates, which needs to be calculated. So 16% is already given and 0.862, 0.743. I will calculate the present value again. So discount factor at the rate of 16%, that is going to be 0.862, 0.743. So first of all, that is going to be 1. First of all, it's going to be 1. Then 0.862 and then 0.743. It's written in the question. It's given in the question, 16% discount rate or cost of capital. 0.641 and 0.552. 0.641, 0.552. Now we have to multiply it in order to find the present value at the rate of 16%. ये 10% का था हमारा, वो हमने already calculate कर लिया था. जी please. So the first answer for the present value will remain the same, which is negative 5,50,000. Next, that is going to be 2 lakh multiplied by 0.862. Really, 2 lakh into 0.862.
172,400.
172,400.
172,400.
Yes, thank you. Then 2 lakh multiplied by 0.826.
122,743.
Nice.
0.6 आ रहा है सर.
ठीक है, okay, I will write it over there also. 122,743.6. Then 1,80,000 into 0.6.
Sir, 200. Sir.
Sorry, जी.
200,000 into 0.743, right? 200,000 into 0.743, right?
Yes.
Sir, वो 148,600 बनता है.
148.
Oh, sorry.
Thank you, Kizet. No problem. Thank you, Kizet. No problem. Next, 1,80,000 into 0.641.
115, 380.
115,380.
115,380. Okay. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115,380. 115 then 162,000 into 0.552.
So 89,424.
जी 85
89,424.
sorry 89
89,424.
जी ठीक है. Now I have to sum up.
89,424.
Yes. Now I have to sum up all the positive values and I will subtract the negative value, which is the initial investment. I will get the negative NPV. So for finding IRR, there is going to be a discount rate which will give you positive NPV, and there will be a discount rate which will give you negative NPV. And then you will find IRR by using the statistics method of interpolation, which is a formula-based method. Yes. So the answer. G.
Positive 24,196.
Okay.
24,196.
24,196. It has to be negative, not positive.
एक
Yes,
second sir.
it has to be negative.
Negative से नहीं आ रहा.
आना
वो
चाहिए.
550
4 plus.
550,000 is in negative. Okay. So the formula to calculate IRR is going to be positive NPV percentage, which is 10% plus.
Sir,
GG. Yes, please.
इन सब डिस्काउंट फैक्टर्स को ऐड करें तो 525,804 बनता है. तो उसमें से 550,000 सब्ट्रैक्ट
You are
करें,
right. You are right. 550,000 is in negative, my dear. So 550,000
हाँ,
is
ठीक है,
more.
ठीक
So
है,
the answer is
ठीक हो
going to
गया,
be negative.
ठीक हो
Okay.
गया.
For IRR, we will use the 10% discount rate first. Discount rate which will give you positive NPV, which is 10%. Then difference in discount rate. Always remember this is the difference in discount rates. So 16% minus 10% divided by positive NPV, amount of positive NPV 42826 minus negative NPV. So minus will become plus automatically 24196 and multiply it. We will multiply it with positive NPV 42826 and at the end you will multiply the answer with 100. I have seen that the children have found a lot of problem in memorizing these kind of 0.06, memorizing these values or this formula. If you are finding that much problem, just write it down on your hand, write it down on your table tomorrow in the exam and just do it. If you're finding that much problem in memorizing this formula, it's not that difficult, but sometimes students used to find a lot of trouble in this without any reason. तो भाई फिर कोई बात नहीं, याद नहीं होता तो लिख के ले जाओ. So 42826
3317
plus 24196 multiplied by 42826. You will not multiply with 100. No, you will multiply with 100 at the end. So can you please give me the answer for this particular part? How much, sir, how will calculate it? You will add 42826 plus 24196. Then on the calculator, what you will do, 0.06 divided by total of this into 42826, you will get the answer. Yes. How much it is?
Sir, I had to ask you one thing.
Yes.
ARR represents average profit upon average investment, right, sir? Like we
Yes.
can see it's average return. What does IRR represent? Like
Internal rate of return.
discussing.
I have already, if you will go to my YouTube channel, because we have less time, so I can't go in detail of IRR. Otherwise, I have explained it fully that what is IRR? Internal rate of return. It is the break-even, actually, it is the break-even point. It is the break-even point where NPV becomes zero actually. So it is the break-even point of the project. The percentage at which
सर
the
ये मीटिंग खत्म होने के बाद फिर से आएंगे?
no, it's not possible for me. Lekin video is uploaded already there for IRR. You will see, I have given the basic lecture on YouTube, but you can ask
सर
me
वो
anything.
NPV 0 वाला क्वेश्चन किधर है सर?
ओ भाई कराने दे मुझे ना, आंसर बताएं इसका, जल्दी करो. No, nobody has calculated yet, please.
सर ये बताएं कि 0.6 को डिवाइड करना है मैंने इन दोनों के सम से,
और फिर
जो दोनों
मल्टीप्लाई
एनपीवीज हैं, राइट? 0.6 डिवाइडेड बाय आंसर, इसको मल्टीप्लाई मैंने किससे करना है?
0.06 को डिवाइड करोगे टोटल के सम से, और फिर मल्टीप्लाई करना है 42826 से.
कर दिए
जी आंसर.
into 42826. सर आंसर आता है मेरे पास 0.3839.
That's it, fine. 0.38.
0.38339.
Yes, yes, 0.3839 multiplied by 100. So the answer is
हाँ
going
जी.
to be, that is going to be 0.1 plus 0.3839, that is 0.13839 multiplied by 100. So our ARR is 13 point.
सर 0.1389 नहीं होगा?
नहीं, our ARR, नहीं, just add it up, you will find it out. 13.84% is our IRR. It has to be 13.84% because at 10% we are getting positive NPV, and at 16% we are getting negative NPV. It means the NPV will become zero at some point between 10% to 16%, and that is 13.84%. So how it works?
सर वो 0.03839 है.
Doesn't matter. यही आंसर आएगा. You can calculate it.
0.0.
Yes,
पॉइंट
yes.
के बाद 0 आता है,
Yes,
डेसिमल
I
के बाद.
understand your point. Again, it will come the same thing which I'm telling you. No matter. Okay. Now let's see the next part and the last part. Advise the director whether he should purchase the machine. He must purchase the machine because IRR is less than the cost of capital. So IRR is more than cost of capital of 10%, but NPV is positive. ARR is also acceptable. Payback period is also fine. But IRR is more than cost of capital. That's true. So what we are going to do, IRR is more than cost of capital. So we will accept the project. Let me write it down. If IRR is greater than cost of capital or discount factor, we will accept the project. So IRR is greater than cost of capital. So here we will accept the project. No, I never said this. I have always given in the guess regarding investment appraisal. So let's talk about the other part. In view of the increase in the cost of capital to 16%, the director considered that net cash flow for each year need to be improved. Calculate the net cash flow inflows for each of the 4 years so that the NPV of the proposed investment is zero. Very easy. He's saying that 16% is the discount factor. That's fine. But now we want that this 24196, we are getting negative NPV, that should become zero. It means we have to increase our cash inflows to that extent that this 24196 negative will become zero automatically. So what you are going to do, you have to add up all the cash inflows. That is 1724000, 1486000, 115380, or 89424. You have to see that how much we are in negative, how much cash we are getting right now. 5,50,000 minus 24169. So that is 525831. Right? So 24196 I have to cover. And currently I'm getting 525831 multiplied by 100. You will get the answer, that is 4.6%. I repeat again. I have to increase my cash inflows. These are the cash inflows, my dear. Let me see. These are the cash inflows. These are the cash inflows, 4 of them. I have to increase them by some amount so that they all become equal to 5,50,000. So what is the deficit? 24196 is the deficit which I need to cover in 525831, or you may say that 525831 needs to be increased by 24196 to make it equal to 5,50,000. So how much cash inflow needs to be increased? 4.6%. So I have to increase every cash inflow, like 172,400 will increase by 4.6%. 148,600 will increase by 4.6%. 115380 will increase by 4.6%. 89424 will increase by 4.6%. And then I will divide them by the discount factor to find the cash inflow values again, new cash inflow values, which we should have, so that after multiplying the discount factor, we will get the present value, which will make our NPV 0. So what you have to do, as I discussed with you, 172,400 multiplied by 104.6%. Again, up, you can calculate 4.6% and add it up also. That is one and the same thing. If you have studied math, 104.6%, same 115,380 multiplied by 104.6%.
Sir, 104.6% कैसे आएगा?
I will calculate again, don't worry. 89424 multiplied by 104.6%. You don't need to do that. You just multiply all these present values by 4.6% and add them up. And then they need to be divided by 0.862, 0.743, 0.641, and 0.552 to get the new values of cash flows. You will divide these values by 0.86 to find the new values of cash flows, and those cash flows are required